Hello, and thank you for joining our webinar today. My name is Jamal Khan. I'm a senior tax partner at Churchill Tax Advisors and the Churchill Tax Group. Today, I'm talking about our capital reduction demergers. This is a very new concept, and it's helping a lot of companies and businesses with essentially demerging or dividing a company with assets and trades or properties and trade or just properties into two companies. I will explain the process and explain the benefits, but this is something that I've done a few times, quite a few times in fact, and have been successful with. So let me just share my slides. Okay. So okay, here we go. So essentially, capital reduction demergers have recently been going on for actually a few years now, but they're a very new concept. And as we get familiar with the hurdles and the clearance processes, I thought I'd do a webinar so that the audience is aware of that this is a possibility for companies with assets and trades or assets that need to be divided. Okay, what is a capital reduction demerger? So it's separating properties in one limited company into two limited companies, separating two businesses in one limited company, separating properties from a trade, dividing businesses into segments. So there are various reasons you could do. You would need a capital reduction demerger. For example, there's a conflict between shareholders. There's a conflict between the commercial reasons, or we've got a business or limited company that owns a trade and limited and a property, and we want to separate the property from the trade because of the commercial risks, or two shareholders have fallen out with each other, or for example, just family members that want to go their own ways. So that's where demerger is needed. So for instance, we have shareholder one and shareholder two. Just say, for example, they're brothers, okay, or business partners, doesn't matter. And they own a company called AB Limited. AB Limited has a trade, a business, and a property, and a couple of other properties. And say these two brothers want to go their own way, or they just want to separate the trade from the properties. Okay, because the properties are a passive investment, it affects their capital gains tax reliefs also. They don't feel comfortable in having the trade and the properties in one business, in one limited company. So what we would do as part of the capital reduction demerger is we would set up a holding company on top of the existing limited company. We do a share for share exchange. There's quite a lot of steps involved. But anyway, I'll just give you a summary. So we'll do a share for share exchange. We'll do a revaluation of the companies. We'll we will issue shares at the current market value. Once we've done that, we would hive up this property into the holding company. So this is what it would look like in slide 3. So the property would then come into the holding company. The trade would still continue to operate under the same old limited company. The shareholders are still the same. And finally, what we would do is we would create a new property company, which would be either owned by shareholder 1 and 2 or just one of the shareholders. And we would transfer the property into the new property company. we would apply for clearance for that. So there is no capital gain. So there's no capital gains tax payable. This would be essentially distributed from the trade. It may be limited to holding company, and from a holding company into the property company. And depending on the ownership structure of property company, newly incorporated property company, we would have if they're exactly the same shareholding, then there would be no capital gains tax or income tax implication, stamp duty implications. But if the shareholding structure is slightly different, for example, this shareholder 2 here, we would have a small amount of stamp duty payable. So something that you need to be mindful of. So if it's going to be exactly the same, then there are no stamp duty implications. But if there are not, then we think about how we do it, whether we transfer we distribute this company into the property company, the AB Limited into a property company, and we separate out the trade. There are different combinations depending on the requirements and the circumstances, essentially. But if we can achieve a tax-free demerger, that's ideal. The reason it's called a tax-free demerger is that we would reclass the shares. We will divide the shareholding in the holding company. So, for example, we would give them 2 separate categories. As the property leaves, so when one of the categories of the shares in the holding company would be allocated to the shares to the property, and as the property leaves the holding company, then we would cancel that class of shares. Okay, so for that we will need to do a series of board resolutions. We need to apply to, and then we also need to apply for capital reduction to, and notify a company's house of the capital reduction. Okay, so to summarize, we need first of all to start with capital reduction demerger. We need to get advanced clearance from HMRC. And there are several steps involved in capital reduction demergers. So we need to plan very carefully. HMRC normally respond within 30 days. There are rejections. Once you've got the clearance, then you start the restructure. There are a series of board resolutions, contracts, solicitors. It's a lengthy process. You need to prepare an insolvency statement. You need to prepare an insolvency statement and let HMRC and also prepare a special board resolution for the capital reduction and submit that to Companies House within the right timeframes. So there is quite a lot of technical elements involved, but the end result is, as I said, that you can have something like this. So, for example, this company we've got a new independent company which owns a property and is not connected with this company in any way or form. And that can be owned by, for example, shareholder 1 or shareholder 2, or both of them, but owned under a separate limited company. So you divided these. Okay. If you've the time frame wise, the capital reduction demerger, because there are properties involved, and the properties need to be transferred from this company to this company, and then from here to here. This can take some time, but if the solicitors know what they're doing, and if the tax advisor, for example, you can coordinate matters in an easier way, so that it doesn't take too long. But you should be allowing at least 4 to 5 months for the whole process. If the HMRC clearance takes a bit longer, then yeah, maybe you can allow a bit longer, but the benefits are very good. Here are my details. And I've been doing tax planning and tax structuring for small, large, and very large organizations for many years now, and I have a very good track record. So if you've got any questions, do let me know. My telephone number, my email is there. Okay, thank you very much. Bye.